Will interest rates go up, and can bond yields keep rising? That's the question I'm going to answer in this video. I'm Jason McIntosh, and as always, this is general commentary and doesn't take your personal situation into account. Now, there's been heaps said in recent times about interest rates, and I'm not going to add to the volumes which has already been said. What I am going to do though, I'm going to make you aware of something that I haven't seen anyone else talking about. And I'm going to do this with a chart. It's a chart you've probably never seen before. And this is a great thing about charts, because a chart can take you to either a time or a place that you either can't remember or never experienced. So let's start with this. Have a look at this chart. Now, this is a chart of the US 10-year government bond yield, and it's a really long-term one. I love a long-term chart. It goes all the way back to 1980. So let me just compress this chart on the screen for you, and we'll get just a little bit more. So there we go. It goes all the way back to 1980. So this chart, it spans my entire financial markets career, plus another, almost another dozen years. So it's basically seen everything. It's seen the wars, globalization. It's seen booms, crashes, you name it. New technology, recessions. they're all in there. You name it. So this is probably the most important chart in finance. And since 1985, which is around this point here, it's been in this long-term downward trend channel. And it's such a clearly defined channel. So let me just push it out a little bit more. So it's not, look, as far as technical analysis goes, it's not a textbook channel in that I'm using a double trend line at the top just to contain all the touch points. Down the bottom, you can see how these touch points, they all come back to this lower level or pretty close to it. At the top, got a little bit more margin, but overall, I think this is a pretty robust pattern, and there's just so much data contained within it. Now, the really interesting thing which I'm bringing to your attention today has been just in the last couple of weeks, just down in this period here. So let's just blow that out a little bit more and zoom in on that. You can see we have a breakout. The bond yield has broken out of this trend channel for the first time in, look, you've got to go all the way back. The early 90s, we've got a little bit of a breakout there at the very beginning of the 90s. Another one here in 87, and that was October 87 when the stock market crashed. Since then though, it's been contained by this channel until just now. Now, another interesting thing we can do is we can put some moving averages on. So as this is a weekly chart we're looking at, these are weekly moving averages. So we're looking at the 50-week and the 100-week moving averages. And you can see that they've turned higher. So when the moving averages turn higher and they've crossed, it's a sign that a market is starting to trend upwards. So it's a really interesting situation that we're currently seeing. Now, look, and by the way, if you're finding this interesting, getting some value, please hit that like button and leave me a short comment. Just say, hey, interesting charts. Just shows YouTube that people are watching and engaging, and shows more people, and I make more videos like this. So please do that. It really helps. Now, what's been really interesting is that I've been hearing people call for the end of this multi-decade bull market for years and years. Even early in my career, if we go back into the mid-90s, during this 1994 sell-off, and then again during 99 leading into the tech bust, people were calling for an end of this what was then really a multi-year bull market. And then again during the 2000s and this period, a lot of people are saying bond yields have bottomed and that they're turning higher. But this has probably been the most persistent trend in finance, because every time people have called for a bottom, it hasn't happened. But look, as I was saying before, for the first time since 1987, all the way back here, we have a significant break of the trend channel. And so look, with a trend channel, thing is now we've got to work out now, what does this mean? What does it mean because we've broken out of the trend channel? And the truth of the matter is I don't know. And I say that because this is such a long-term pattern. We don't have that many examples of such a long-term pattern breaking. But if we just look at the theory around a trend channel in general and how shorter term channels work, what we often find with a trend channel is that, well, two things. Often it's a case of two things. So one scenario is that the break of the trend channel is telling you that the downward momentum the market's lost its downward momentum, but rather than turn higher and go into a new bull market, the market then starts to track sideways in a big trading range. So what could happen in this case, if that sort of scenario were to happen, we could find that for several years the market does something like this. We get a little bit more upside, then it pulls back, and really we could do this sort of price action like I'm drawing on the chart now. It could be several years of really just sort of tracking sideways and going nowhere in particular. That would probably be the best case scenario for the markets, just to see this rise in yield start to stall out and have the market start to move sideways. But if this were a chart of say this was a stock price and it was on maybe like a daily chart showing a trend over a year or two, what I'd be looking to do, I'd be looking to buy the momentum. I'd be looking to buy the breakout, because often you find when a trend channel breaks, you get price action which is more like this. You get some sort of a pause after the breakout, and then it starts to ratchet higher over a period of time. And if we get that sort of price action developing in bonds, well, then that becomes a new uptrend. And that potentially becomes a problem. That could have some serious implications for the stock market, the property market, and the financial system generally. So it's something I think we need to be very aware of, that we have broken from this trend channel, and there is a possibility that a trend channel break can lead to an acceleration of momentum in the opposite direction, which in this case would be higher yields. Now, I've got my doubts that we're starting to see a big multi-year uptrend in yields develop. And I say that because there's so much debt built up in the global financial system that I think a persistent upward trend in yields would cause all sorts of problems. So my favourite view is that it's more a case of we might move sideways in an extended trading range for several years. But look, either way, I'm aware that this is a breakout, and just by being aware that it's a breakout, it makes me better prepared to manage the possibilities. And the same applies to you as well. And that's what successful trading and investing is all about. It's about how we understand the possibilities so we can maximize our returns, but then also manage our risk and protect our capital. It's much harder to do so if you don't understand the possibilities, if you don't understand stuff like this is currently going on. And just one last point to leave you with for now. Just moving this to a daily chart for the moment. This is a very strong move we've had in a fairly short space of time, and it does look somewhat overextended in the near term. There's also a big short open interest developing, where a lot of market participants are speculating on higher yields. When that happens, it's often a case that we're getting to some sort of a near point pause in the trend, maybe a consolidation. I think the big test is going to come is, should we get some sort of consolidation develop over the next few weeks, or maybe even the next several months. If the market does sort of consolidate something like that over the next maybe few months, and then later in the year to next year we get a break to a new high, well, then that's really going to be a point to say, well, look, this could be a big trend which is now starting to swing higher. Remember, this is a 30-year trend channel. This isn't a trade for next week or next month. This is something to be aware of over the next year, 2 or 3, or even beyond. And the big question, I think, for many people is, do rising interest rates hurt stocks? And I'm going to have the answer to that in the next video. So thanks for joining me. I look forward to talking to you again next time. Bye for now.